Hello my dear CMA inter students, welcome to our YouTube channel. Today we are going to discuss the most important AS, that is AS12 government grant. So what is government grant? So government grants are the assistance, they are what sir? Assistance given by the government in cash or kind to an enterprise for past or future compliance of certain condition, right? So whenever government gives some assistance in the form of grant, that can be in the form of cash or kind for compliance of certain condition which are relating to the past or in the future, right? But this AS12 does not deal with what sir? AS12 does not deal with the government assistance other than in the form of government grant. If the government is giving some assistance, some help other than government grant, then this won't cover in the AS12. Then government participation in the ownership of the enterprise. If the government is participating as a owner, right, as a ownership in the business, that time this AS12 will not be applicable, my dear students. Next, recognition of government grant. When to record the government grant in the books of accounts? So government grant is not recognized until there is a reasonable assurance. Reasonable assurance is very important, my dear students. It is not assurance alone, it is a reasonable assurance that the enterprise will comply with the condition attached to it. And second thing, grant will be received. That means the enterprise should give the reasonable assurance that the enterprise will comply with the condition attached to the grant and the grant will be received. Then only the entity can record the government grant in the books of accounts. Next, my dear student, there are two approaches for government grant, that is capital approach and income approach. Capital approach means whenever the government grant in relation to promoter contribution, we call that as a capital approach, and other types of grant we call as a income approach, my dear student. Next one, types of government grant. There are two types of government grant. Number one, non-monetary government grant and monetary government grant. So what do you mean by non-monetary government grant, my dear student? Non-monetary government grant means a government grant given, right, in the form of kind, not in the form of cash, in the form of kind, like land, building or other resources. So if the government grant received in the form of asset at a concessional rate, if the government is giving you the land at a concessional rate, then how to record it, sir? You should record it at a acquisition cost. At which cost you acquire, that cost you should record that asset. For example, my dear student, land, let's say the land government is given, this land cost is 10 lakh and this land government is giving for how much, sir? Let's say 6 lakh. If the government is giving the land for 6 lakh, then we should record this land in our books of accounts for 6 lakh rupees. Next, if the received asset at a free of cost, if you receive the asset at what, sir? Free of cost, then what, my dear student? Then record the asset at a nominal value. Now nominal value means what, sir? 1 rupees, 10 rupees, 100 rupees, whatever is suitable. Are you getting my point, my dear students, right? So again, if non-monetary government grant given in the at a nominal rate, that means free of cost, we should record at a nominal rate. Government grant given at a concessional rate, if the asset is given at a concessional rate, record at a cost of acquisition. Next, accounting for government grant in the form of monetary. If the government is giving the monetary grant, like money, right? So if government is giving the monetary grant relating to fixed asset, relating to what, sir? Fixed asset. Now we know there are two types of fixed asset. One is called depreciable fixed asset and non-depreciable fixed asset. So first we discuss the depreciable fixed asset and then we will discuss the non-depreciable fixed asset. If the government is giving the grant for depreciable fixed asset, then there are two methods. How to record the government grant if they are giving for the depreciable fixed asset? First one, that government grant, right? whatever government grant is given, reduce the government grant from the cost of the asset and depreciation will be charged, right? For example, if my dear student, let's say cost of the asset, cost of the asset is 10 lakhs and government grant is, let's say, 8 lakhs. Then what will you do, my dear student? They said reduce the government grant from the cost of the asset. Reduce the government grant from the cost of the asset. How much is the balance amount? 2 lakhs. In this 2 lakhs, you should charge the depreciation. This is method number 1. If the government grant related to depreciable fixed asset, then first method is reduce the government grant from the cost of the asset and depreciation will be charged on the balancing amount. Next, my dear student, now if the entity don't want to reduce the government grant from the cost of the asset, then what is the next alternative, sir? Instead of reducing, treat the government grant as a deferred income. That means you should create a deferred government grant, DGG you should create. So treat the government grant as a deferred income and record the income, right, in the proportionate to depreciation or over the life of the asset. That means you have to amortize that, you have to defer it over a period of life of the asset or the depreciation rate. Are you getting my dear students? What do you mean by that, sir? Suppose in this case what happened, cost of the asset 10 lakh, government grant 8 lakhs. So what we do, when we receive the government grant, we write the entry call, that is cash account debit to DGG, deferred government grant, right? And thereafter this DGG, suppose the life of the asset is 10 years, then we will distribute this 8 lakhs over the period of 10 years or the rate of depreciation, whichever is more clear evidence, right? Next, my dear student, after that, if the government grant is related to non-depreciable fixed asset, then again first there are two methods. Number 1, reduce the government grant from the cost of the asset, similar to first one. Second, my dear student, now if the entity or the company they doesn't want to follow method 1, then what they will do, the government grant, then you have to see whether government grant attach some condition or unconditioned. If the government grant is unconditional, then credit to the capital reserve. That means entry will be cash or bank account debit to government, that is called capital reserve account, right, my dear student? If government grant is conditional, that means some condition are attached, like 4 years, 5 years, 6 years, whatever may be. If a condition attached to the government grant, then treat the government grant as a deferred income and then defer the government grant over the condition period by transferring to the P&L account. Like you pass the entry cash or bank account debit to deferred government grant, and this deferred government grant you will transfer to P&L account. So deferred government grant account debit to P&L account over the condition period. Is it clear, right? So we have discussed here the government grant related to the monetary item, what we have to do, what is the account treatment for depreciable asset and non-depreciable asset, right? Next one, if government grant related to the revenue nature, like government is giving the grant to set up certain expenses, you incur some expenses, for that government is giving some grant to, which is in revenue nature. Then you again two methods. Number 1, treat the government grant as a other income and transfer to P&L account, right? You will pass the entry called cash or bank account debit to other income, and this other income will go to where, sir? P&L account. Method number 1. Method number 2 is what? Reduce the government grant from the expenses. For what purpose government has given the grant, for that you can reduce the expenses. For example, government has given the grant for the salary. So what will you do? You reduce the salary from the government grant and record balance salary in the balance sheet, that is called in the trial balance, and transfer to the P&L account, my dear students. Are you getting my point? Yes or no, right? Don't transfer the government grant to the balance sheet. Is it clear? Yes or no, right, my dear student? So treat the government grant as other income and transfer to P&L account, or reduce the government grant from the expenses. Right, my dear students? This is the government grant in relation to expenses, that is called revenue nature. Third one, grant relating to promoter contribution. Like sometime government want to do the development in economical backward area. So for that, they help the economical backward area to set up the plant, to purchase the machinery. So if the government is giving the grant in relation to the promoter contribution, that time the grant received will be transferred to capital reserve. The entry will be, my dear student, cash or bank account debit to capital reserve. I hope, my dear student, it is clear to you, right? Come to next one. Now sir, we receive the government grant, right? And thereafter, if the company failed to comply the condition, then what is the situation? If the company failed to comply the condition, that time the government grant become refundable, and refund of government grant you have to deal with AS 5. You have to record as an extraordinary item as per accounting standard 5, my dear student. Then what we need to do? So what is the accounting treatment for refund of government grant? So whatever you did, how you record first at the time of receiving the government grant, what entry you pass, that you have to reverse at the time of refund. For example, if the grant received were adjusted against the cost of the asset, then at the time of refund, grant amount will be added to book value of the asset and revised depreciation will be charged, right? So earlier what happened, sir? Your grant was 10 lakh, your cost of 10 lakh, grant was 8 lakh, the book value become how much, sir? 2 lakh. In the 2 lakh you might have charged the depreciation. Then there will again WDV will come. At the time of refund or in that WDV, you should add back what, sir? Grant amount, and you should charge the revised depreciation. So first one, if the grant received were adjusted in the cost of the asset. Second, if the grant received was transferred to DGG as a deferred income, right? If you transfer the government grant as a DGG, as a deferred income, then in the balance sheet you will have the DGG, right? So what this AS12 say, whatever remaining portion of DGG is there, now adjust the grant amount to that, and balance amount of grant transfer to P&L account. For example, earlier case, how much was the cost? Was 10 lakhs. Cost of the asset was 10 lakh. DGG was how much? That is government grant how much? Which was 8 lakh, which transferred to DGG. Let's say over a period of 2 years, you might have transferred DGG to P&L account. Let's take an example. You might have transferred 2 lakhs to P&L account. So how much the DGG balance amount left, sir? 6 lakh. Now this 6 lakh you should adjust in the grant amount. Like at the time of refund, you will say DGG 6 lakh. To grant, government grant 8 lakhs. So balance is how much? 2 lakhs now. You will adjust it 2 lakhs to where, sir? P&L account. Are you getting my point? Right? Next, when government grants treated as capital reserve, then at the time of refund it will be adjusted against the capital reserve. It means what, sir? When you receive the government grant, what entry you have passed? You pass the entry called cash or bank account debit to capital reserve. Now you reverse it at the time of refund. That means your entry will be capital reserve to cash or bank account. Right, my dear students? Yes, I hope it is clear to you. Okay. Now there are some disclosure. You have to disclose which are the accounting policy adopted for government grant, including the method and presentation in the financial statement. Next one, you have to disclose nature and extent of government grants recognized in the financial statement, including the grant of monetary asset given at a concessional or free of cost, right? So okay, my dear student, I hope you have understood the AS12. It is just a revision of AS2, detailed AS2. Generally we teach in the our regular classes, right, my dear student? So I request everyone, so please subscribe our YouTube channel, so for more updated video. Okay, my dear students, it's time to say tata bye bye to everyone with a beautiful smile on a beautiful face. Okay, my dear student, take care, bye bye, and all the best for your preparation. Thank you, my dear students.